This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices rose in Asian trade on Tuesday, after a drop of more than 3% in the previous session, as worries over supply stirred by conflict in the Middle East blunted a dismal showing of China data. December Brent crude futures, set to expire on Tuesday, rose 36 cents, or 0.41%, to stand at $87.81 a barrel by 03:05 GMT. The more heavily traded January Brent crude futures climbed 29 cents, or 0.34%, to $86.64 a barrel. U.S. West Texas Intermediate crude increased 34 cents, or 0.41%, to $82.65 a barrel. Oil fell more than 3% on Monday as investors grew cautious ahead of Wednesday's U.S. Federal Reserve meeting, despite an escalation of Israel's attacks on Gaza.
The World Bank said on Monday it expected global oil prices to average $90 a barrel in the fourth quarter and fall to an average of $81 in 2023 as slowing growth eases demand, but warned that an escalation of the latest Middle East conflict could spike prices significantly higher. The World Bank's latest Commodity Markets Outlook report noted that oil prices have risen only about 6% since the start of the Israel-Hamas war. While prices of agricultural commodities, most metals and other commodities, have barely budged. The report outlines 3 risk scenarios based on historical episodes involving regional conflicts since the 1970s, with increasing severity and consequences.
Moving on to the top news in the energy sector.
High retail diesel prices in the U.S. Midwest are drawing more supplies from Gulf Coast and Chicago pipelines that should ease supply worries and cool prices, traders said, as farmers wrap up harvests and winter demand has yet to arrive. Diesel, used in trucking, farming and manufacturing, hit $4.87 a gallon in Minnesota on Thursday, a nearly 11% increase from last month, according to data from fuel price tracker GasBuddy.com. Maintenance-related outages at Phillips 66's 208,000 barrel per day (BPD) Ponca City refinery in Oklahoma largely has caused the Midwest price surge across Minnesota, Iowa, and Kansas, fuel traders and brokers said.
The need for agreement to tackle global warming is higher than ever, but it has never been harder as the geopolitical backdrop complicates international cooperation, the European Union's climate chief said on Monday ahead of next month's COP28 summit. Climate Action Commissioner Wopke Hoekstra also said the EU would not accept an outcome at COP28 that only reached deals on less contentious topics, such as increased use of renewable energy, if it failed to solve tougher issues such as phasing out fossil fuels. This is not an a la carte menu. It is actually all that is on the menu that needs to be delivered on, he told Reuters on the sidelines of a preliminary COP28 gathering in Abu Dhabi ahead of the UN summit starting at the end of November.
Next, we have the top news in metal markets.
Albemarle Corp, the world's largest producer of lithium, is expected to report lower quarterly profit as prices of the silvery white metal came under pressure due to concerns of falling near-term demand and oversupply. Lithium miners have had a tough year as weak electric vehicle (EV) sales growth led to high stockpiles and sent prices of the metal tumbling down. Lithium is a key metal used in EV batteries. As the lithium market balances shift to adequately supplied in 2023 and oversupplied in 2024-2025, we expect to see a period of earnings and margin pressure across the value chain, BofA analysts said.
A European Union industry group again downgraded its outlook for the steel market on Monday, saying demand is due to tumble 5.3% this year amid high inflation and geopolitical tensions. In July, the European Steel Association, Eurofer, forecast consumption of steel was due to drop 3% instead of the 1% decline it had predicted in May. The perspectives for the European steel sector get gloomier every quarter amidst disruptive wars, global tensions, an unresolved energy crisis, high inflation, tightening economic conditions and historically high import shares that are strangling manufacturing, said Eurofer Director General Axel Egert. We will now look at the top news in the agricultural sector. Malaysian palm oil futures fell for the second consecutive session on Tuesday, weighed down by concerns over easing demand and rising supply. The benchmark palm oil contract for April delivery on the Bursa Malaysia Derivatives Exchange fell 58 ringgit, or 1.6%, to 3,679 ringgit, $772.17, a metric ton in morning trade. The contract is down 2.4% so far this month, and is heading for its second consecutive monthly loss.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.